7:30 Australia time. I know Shaun's just up now, 8:30 London time. Welcome to everyone that's joined tonight. We've got our regular session. It's going to last about 45 minutes. Tonight we're going to have a look at global markets, where they're going. In particular, we'll take a look at equities, bonds, major currencies, and this week we'll have a special focus on gold. So for all those people that are listening, come down the chat line. If you can hear us, let us know. That'd be great. We'd really appreciate that. Got Shaun Downey with me tonight, coming from the UK.
Everyone.
Hi, Shaun. How was your weekend?
Yeah, it was good. Took my grandson Jack away for the weekend, so we went up to the National Railway Museum in the north of England. So nice bit of first-class train travel. He loves his trains, so he said, "Oh, Granddad, I like first class." I said yeah, so do I. So we've been busy. Got back late last night, and so ready to rock today. Yeah,
and it's going to be a big week. Market's been going sideways in equities. I mean, a few of the leading sectors are broken down, and we touched on that last week. We were talking about financials. Certainly made a move down through the week. Tonight we'll reflect on some of the other sectors and what's happening for the week ahead. First of all, however, just a little bit about us. Shaun, can you give us a bit of a rundown of your background pretty briefly?
Yep, okay. Started in 1979, 16. Traded commodities initially and LME metals. Then I was head of FX, making markets spot and forwards. Moved into financials, treasury bonds. Then went to Australia, head of trading, treasury, global interest rates, currencies, Speedo swimwear, Foster's beer. Moved into design, designed some products for Reuters, including Globex and Reuters technical analysis. And then 20 years promoting technicals, professional market around the world. Wrote my own books, built my own studies. Was what is the basis of trading safely. Wrote commentaries for 5-6 years, and look after professional clients who subscribe to my studies and also to my commentaries about the studies. So that concentrates on futures and foreign exchange and bonds and commodities. So not stocks, which is what trading safely is about. So run some private funds as well over the years, and ran an arcade in Ukraine for a year. That was an experience.
And here we are today.
Yep.
Yeah, and myself, for everyone, my name's Jeremy King. Been a professional trader for 15 years, power markets especially. Worked for Optiv Australia, making in excess of $100 million trading. We had Shaun as my mentor for the last 5 years, thankfully. And right now we're here to help you impart our knowledge. So welcome to tonight. Should be a good session, and we're going to take a look at some of the trades. There hasn't been a lot this week because equities have largely gone sideways. We mentioned last week the market's just waiting for time to pass. But certainly certain sectors have moved. So we'll just review some of the existing trades and how they're going. Then we're going to take a look at gold in particular. Then we'll take a look at other markets. Finally, we might review one of the technical indicators on our software, have an in-depth deep dive into that. And then we'd love to answer any questions you have. And obviously, if there's anyone who wants to have a consultation with us, we're offering a free consultation. There'll be a link in the text box tonight, so feel free to click on that link, and that will enable you to get through to us and have a chat about what it is that we can do for you. I guess first of all, though, if you'd quickly just run through our general information disclaimer, it's important. Shaun, what was your summary of the week while people run through that disclaimer?
I think the key one was probably the pound. What we had was we mentioned last week that it had hit a major support, the final major support. It held it perfectly, and then there was good example of stories already being in the price. So last weekend, Theresa May had a very big speech she was going to do on Tuesday about how she was planning Brexit. It was telegraphed to the newspapers over the weekend. Hard Brexit, whatever that really means, I'm not quite sure. And so the pound went down initially on Sunday evening, not a great deal, but it was a knee-jerk down. By the time I got up in the morning Monday, it recovered a little bit, and then that really was the low, was Sunday night, and then we moved ahead through the week. Again, on Friday, we were down initially, which was to do with the weak retail sales number, and then it came all the way back up again and closed on the highs of the day on Friday. So people get bored with the same story. There's another Brexit story this week, so the Supreme Court in the UK is going to rule about whether they have to go to Parliament before they do Article 50. I think that's Tuesday morning. So again, it's telegraphed that they're going to make them have the vote because the judges are very pro-European, based on the way the press have investigated them since the original ruling. So I'd expect the same thing, the pound to knee-jerk down initially, and then it's what happens after that. We mentioned in the Facebook private page, you put something out about it being pretty close to a key resistance. So watching that closely. The thing that came out was also the cross rates on the professional commentary. Pound CAD, there was buys against Canadian dollar, Kiwi, Aussie, sells against the euro. There was a lot of signals. It was against most currencies, and the Canadian dollar was the one that was the most interesting because the dollar CAD also then created the dollar rose against the Canadian dollar, and that was to do with the Canadian central bank being quite dovish. So Christmas and birthdays as far as currency is concerned, because you're always buying one and selling the other, and effectively the pound was the strongest currency and the Canadian dollar was the weakest, and signals came up on both. So you buy the pound and you sell the Canadian dollar, and that moved about 700 points last week. So that was a big move, went from 157 to about 265. So currencies for me was the big one. The pound, the FTSE, talked about that being close to a breakdown, and also its correlation to the pound. So we were bullish at the pound, which would be bearish for the FTSE, and the FTSE was by far the weakest index last week. Other indexes were up on Friday, and the FTSE was still down. So the FTSE remains under pressure as long as the pound is looking positive. So they were the two key takeaways for me, I suppose.
Yeah, it was interesting last week we mentioned with the pound, despite the fact that it had been selling off, we've been talking about the pound being relatively strong for the last, I think, 3 weeks now, while the market has actually drifted down. But I've pulled up these weekly range deviation pivots, and the point we made last week was that they weren't closing below the first pivots down. And I won't go into the detail here, but basically, when a market's going down, price needs to close under at least the first pivots down for the market to be bearish, and that just never happened in this whole sell-off. We never closed below the first down, and then this week we closed above 3 up. So there was some underlying clues there in the software we provide that the pound is actually bullish. Certainly looked overextended in this last week. Pull up this study here. Shaun, I was talking to you about this tonight, where the weekly first down was below the monthly for the first time, so I was overextended, and we had a buy signal, and the market's flying out of there. Yeah,
that's always really important if we get that sort of setup when you're at a major support and resistance, which we were on the pound. So you get you're at a key level, and then the market is overextended going into that key level, and that's the sort of thing that we're looking for. There's a little bit about banks. Said last week that banks were the top 8 sectors, and we had results from Goldman Sachs, Morgan Stanley, I think Citibank as well. And we just mentioned that probably everyone was already long, and Goldman Sachs in particular really beat the estimates in a big way, and the stock went down. So we had good news, bad action. It's because everyone was already long. So this is an example of where you can't just rely on what the results happen to be, whether they beat or whether they miss. It's where they are in relationship to the rest of the market. So I think we got a note from somebody on NTRS, which was a bank that did release its results, and they missed, and they dropped, they gapped a lot lower. So anything that missed in banking got slammed. Anything that beat in banking didn't go up, and in most cases went down as well. Just shows a little bit about it. We had a sell on NTRS, and they were asking why it hadn't been taken, and the reason why was because it was within the 7-day rule of when results are coming out. So we always look at a calendar to make sure that we're not taking a buy or a sell signal within that period, because we don't know what the result's going to be. Even if the results have been coming out later, coming into the results, you can see that gap lower on Wednesday. From that sell signal, price hadn't really developed, had it? We were a little bit in our favour, but not a great deal. So our way of looking at it would to say, well, the trade hasn't developed coming into their results, and so we would either liquidate the position, or if you're being very aggressive, reduce your exposure considerably. So you might only have maybe a quarter or a third of the original volume that you might have if you had a really strong conviction about the price was going to go down, whatever the results were going to be. So, but normally we say to people, especially non-professionals, that you would not hold a position if it hasn't developed.
Yep. That was a very good point, that one. Don't trade if there's an announcement in the week ahead. I just wanted to mention one other thing with the pound quickly. We're back above last year's close. At last year's close, in my experience, it's a critical level. The level was 123.62 in the pound, and this is the first time we've closed a week above it. So there's another bullish factor on the pound. So I guess we'll just come back and take a look at some of the stocks that have been in play. They haven't, for all the new people that have been with us this week, there hasn't been a lot of signals because equities largely have just been going sideways. I would imagine it's got something to do with the Trump inauguration, but whatever the reason is, it doesn't really matter. There just hasn't been a lot of signals. That can happen at times, so just be patient. It's not like we're going to feed you signals, constantly and frequently. It just doesn't happen like that. Sometimes there's a lot, and sometimes there's a few, and sometimes there's none. And this week has been one of those times where there's not a lot. But as some of the other members would probably vouch for, there's times when there is a lot, and that's just the way it works. So let's just review some of the existing codes that have been in play. Prudential in London, financial sector. That's been, in play for at least a week now. Very close to sort of possibly dropping down to 14.5 or thereabouts, Shaun.
It's just drifting lower, really. It's not doing a whole amount. Obviously, it's sort of pseudo financial. It tends to be it's more insurance and life insurance, but it's in that sort of area, and just drifted down, really. So we'll see what it does this week. I think the other one was EXPN in London.
EXPN did a bit of work because we actually sold that at the start of the year on this signal here, and we had to wait probably a week or so. Stuck its head back over resistance, but the stop was well above up here, so we had no reason to close out of that trade. It's now broken lower, so that should be an interesting week as well. For the new people that are watching, the blue arrow pointing down is a sell signal. The next thing that we're looking for each day is whether we get a green number. If a green number pops up, then we'll take 25% of our position off. So other codes that we've been looking at, PRY.XASX, the Australian code, Australian stock market. That had a sell at resistance as well, 2 signals in fact, and it's reacted quite strongly. We've had one profit-taking opportunity, and which is that represented by that green number 1. The market's still drifting lower there, so we'll just see what happens there. Other codes include Aluka Resources in Australia. That hasn't done much. It's still sitting up at resistance. But at the same time, we haven't been stopped out either. And while I'm here, I just sort of raise this point. We've got a sell signal here, the blue arrow pointing down. The pink line is our stop loss line, and you're probably all sitting there thinking, well, hang on, price actually went through that through the day. But the way our system works is we don't close out on intraday. So we need the price to remain above this protection line at the end of the day to warrant exiting that position. In this example, this is a good reason why we don't just have a fixed stop, and we do need to monitor our positions every day so that the closing price is the one that's important with regard to stopping out of the position. So that's kept us in this position now. Obviously, we'd like to see it close back under support here, and we'll go from there. So a little bit of work on Iluka resources still. Another one was SMG out of the States. I think this is financials. Also doing work. A strip that's marginally lower, but hasn't broken down as yet. So
HBAN.
HBAN. The US stock. Shaun. Sorry?
The thing about that is their results are coming out on Wednesday, and as you can see, Friday produced a buy signal. It's a very minor buy signal, and so really there's no reason for people to carry on to hold that short. It's going to come out. I'll just check exactly when it's going to come out. It's just going through all the earnings dates, and last week I said that Google and Amazon were on the same day.
Yeah.
And Amazon have changed.
Oh, okay.
It just goes to show that you have to monitor it. I do that every day. Companies do change the day that they're going to do their results, and that's exactly what Amazon have done. So it was. So if we look ahead to the week, Google is this Thursday, and I think so that's a big one for the market. Definitely be focusing on that. That will be after hours on Friday, I would imagine. I'd be very surprised if it wasn't. Oh, they've changed their name, haven't they? What do they call themselves now? Alphabet. That's it. Time not supplied, so we don't know when the results are coming out, but it's normally after hours. But Amazon have changed to February the 2nd.
Let's take a look at. So what's your thoughts on Google here, Shaun? Obviously, we've got an announcement, so we wouldn't be acting, but just looking at that chart, what does that tell you?
Well, the thing is, there was a buy a few weeks ago, pretty congested sort of area, and we've got that final resistance. We talked about it last week, and that is a big level. So really very, very interested in how the market performs there. I'm not interested if it goes above it, what's called after hours. So what will happen, the results will come out probably after the close. There's about a half an hour session. I remember from about 18 months ago, Google, the high after hours was about $825, and by the time the main market opened the following day, I think the high was about 805 or something. So you can get levels that don't actually show up on the charts, because these charts are only showing what happens in the main trading hours, which is how you want it. So that's a massive level, really important. If we gap higher and then come back to that breakout point, then it should hold. That's what you'd want it to do, and then there is no resistance, so we don't know where the price can go. It can go a lot higher. The thing about Google is I don't think the market, the professional market or anybody, really understands about exactly what they do. They do so many things, and they buy so many companies and involved in so many future projects. I think it's very hard for people to really know what it's worth, which means that it could rally a great deal because people don't know how to price it, as it were. So pretty important. We've also got Apple, which the market always focuses on, and that is,
I'll pull that up now.
So that's the following week. So that's Jan 31. So we thought really that Thursday was D-Day, Amazon and Google on the same day, and we've sort of drifted out to the following week. Once Amazon is out of the way, as far as I'm concerned, the earnings season's over for the market overall. So
When did you say that was, Shaun? Just for everyone's.
February the 2nd is Amazon, so they've moved back a week effectively. And that will be, I'll just check to see whether it's after the market close on Thursday, yeah. So the following week. And
Apple, so thoughts on the chart?
well, Apple is bullish, just about. I mean, again, it's gone above its final resistance. There was a very minor sell signal at the end of last week, but there was no range in it. Again, there's no resistance at this point. People will be focusing on the all-time high, which is actually up at 130 something, 132. Yeah. But see the way that our level has dropped. Yeah, so that black line above the market had moved down from the all-time high. So whereas the market will be focusing on about 132, I think it is, our focus has already shifted to, I think, 120. So pretty important. Back below 120 sort of opens up 111, 112, and the line in the sand is about 103, that final support there. So at the moment, mildly bullish. But we'll have to wait for the numbers. I suppose in the background, I'm no expert on mobile phones, that's for sure, but Google has brought out a phone called Pixel, I think, and Google don't normally do things badly, and Apple's revenue is 65-70% of the phone, so it's a big chunk of their business. They got a boost from Samsung's problems, their phone's catching fire. So one thing about Google, it might be a bit early. I'm not one for really delving into the results of companies, but on Google I'll make an exception. If there are any numbers about how many phones they've sold, I'm actually pretty interested in that, because I think that would, in the longer term, as far as I'm concerned, is probably going to hit Apple a bit. And Apple's got a lot of money, but it doesn't really know what to do with it. Probably give it back to the shareholders is probably what they'll do. But just some things in the background about the rivalry between Apple and Google.
We might move on to the market of focus this week, which is gold. And I've just pulled up a chart of spot gold. I might even switch over to futures in a second and just have a look at both markets. Gold's an interesting one. Just bear with me 1 second while I adjust this. But basically with gold, obviously very bullish last year. It was a 1 year reaction. The market's heading back down. In the last week, we tested last year's midpoint, and you can see on the chart here this little orange line at 12.18.26 was exactly the high through the week, and we had a sell signal the next day. So last year's midpoint has control of gold this week, but you know, we're looking at there's been significant support form for gold around that 11.55 area. The market's moved up, tested 12.21. You would think back above last year's high on a monthly close would do it. It'll make gold look extremely bullish, but so far we've got a sell in place, and that happened just during the week. So there's still very much bearish overtones to gold, and it needs to prove itself, but at the same time, I'm going to drop back into a different program to analyze gold from a different perspective. If we come back over to here, there would seemingly be a big opportunity coming either way for gold. The study at the bottom enables us to track what gold's doing across different time frames. The little green squiggly lines are the daily time frame. Right at the low here, little yellow dots, that was 7 weeks down. The market corrected up, came all the way back up to the annual midpoint, as we just discussed, and we got a sell signal from that midpoint. So what I wanted to say about that at the moment, there's a couple of things that are interesting. First of all, we're basically going to go back into range deviation pivots. And we talked about this last week when we did a focus session on range deviation pivots. And what we said last week was, well, you know, it needs to get above, close the week above the first up. And at the end of the month, it needs to close above the first up range deviation pivot. And for anyone new that's listening, I'm just going to add those levels in so that we can see them. May not necessarily be very clear, but what I'm looking at here is there's yellow lines and pink lines, and what they represent is basically range expectations for a week across different time frames. But the point I'm trying to make is that gold has moved for the first time in about first time in a month. Weekly range deviation pivots moved above the monthly, so that's in an overextended position, and we're at last year's midpoint, and we got a sell signal. But at the same time, we're coming into the end of the month, and typically what you'll find is that markets that can close their time frame above the range deviation pivot for that time frame will remain bullish. So if we can close above 1190, which is this pink line here, at the end of the month, then we are going to be facing a bullish scenario. But obviously, with a sell in place and stalling at last year's midpoint, if we were to close the end of the month back under 1190, we're going to be looking at lower. We're also back at resistance here, overextended. So it should be a pretty critical week for gold. I wouldn't be surprised if it just goes sideways, with the ultimate goal of testing this 1190 level, but certainly back under there at the end of January. And for me, it's probably testing back down here at this lower channel. So Shaun, what do you reckon?
Yeah, I agree. We sort of, I had 1209 as a monthly level as a resistance, and it's sort of popped above it, but it hasn't really held above. It's also moving to a certain extent in relationship to the dollar index, which has sort of drifted lower earlier on the week, and then has reversed a little bit. So yeah, it's a pretty important point. So we just have to wait and see. But for me, that sell signal is valid. And it's easy to know where you're wrong as well, which is always good.
Yeah, absolutely. So critical point there. I think we'll talk about this, I think, you know, immediately after the week after the month ends, but the writing's on the wall there. You know, it's quite possible that this is a major low down here, but we're going to know basically in, you know, the next 10 days or so. So for me, that failure at 12.11 this week, we didn't close over there, and now we're coming back into the end of the month, so we need to test this level at 11.90. And if we close under that, then watch out for a move lower. I might just flick over the dollar index, Shaun, because you mentioned that.
Yeah, had a buy on Wednesday, and then it's drifted back. So you can see that black line is pretty important. Yeah, so that's the really important part there. If we hold that, and then the buy signal will remain valid, and then we can extend back up. The other thing that's important is the high up at 103.80 or whatever it is. That's an important resistance as well. So if we recover during the week, that's the initial target. So it goes back to that previous high. So dollar has been pretty choppy. So we're waiting. We have a bullish bias on it. It's got to hold that low from last week.
Interesting when you look at it from a range deviation perspective. This is last year. We actually failed at the end of last year to close above the annual level at 103.93, and the market's reacted down in sympathy to that. Right now, on a weekly level, looks extended on the downside. So yeah, that buy signal that we saw the other day is still looking good for a move higher Um, so it should be an interesting week there, but the dollar's looking a bit overdone from this perspective, looking at range deviation. Might just flick through some of the other markets.
Pot was interesting, wasn't it?
Yes, it was.
That's been one that's been on our radar screen for a while. So I've had a position in that since November, I think. Half position.
I'll just call it up. Yeah. Let's have a look at it. Yeah. Right. Just for everyone's benefit, what does pot do, Shaun?
Agricultural chemicals. So potash is they're the biggest by a long way in that area in the whole world. The price of potash has been subdued for a long time, and the price has been going sideways the whole of last year. But if you look at time area 1 and also time area 2, you can see that they'd all stepped down. So the annual levels and the semi-annuals all stepped down at the end of the last year, and many of them went below price. So what had always been resistance has switched to support. There's one final level to break out on the time area study, but as you can see on Friday, we had a buy signal, and for me that's valid. You could wait for it to get over that final time area level if you're being more conservative. The thing to note there is there's no resistance. The resistance is, if you were fishing for a level, it's the yearly level from last year, which is all the way up at 37. So we're currently at around 19. So almost room for 100% rally. And there's been plenty of examples of that in the last 18 months, where regardless of the fundamentals, that's what stocks have done. So US steel is an example of something that was languishing at $8. It's trading at 37, I think now. Has the price of steel gone up? No. Is US steel making more money? No. Is it losing more money? Yes. And the share price goes up by 300% in a year. So another example of how fundamental analysis does not dictate what the share price does. So I'm not really, I'm not overly, there is a correlation, a weak correlation between the price of grains and the price of fertilizer, as it were, but I'm not really that interested in that. I think if you do chart SQM, which is another fertilizer stock, the thing that got me interested in this was I had to write a consultancy piece for a big fund in America in April, May last year. It might have been a bit earlier. And so I went through the 6 or 7 stocks that were in that area, and SQM was by far the most bullish at that point. And that stock has actually gone up by over 100%. It's gone up 120% from early last year. And that was another one of the important philosophies when you're looking at a sector and trying to, especially if we're looking for sectors that have been unfashionable to become fashionable, you are interested in buying the strongest and selling the weakest. A lot of big hedge funds, a bit like California, for example, which has something like 100-something billion under management, they can never just buy a stock. They have to buy a stock and they also have to sell a stock in the same sector. So if you do TNH, TNH was the weakest one. So the recommendation was to say that, well, okay, you buy SQM and you sell TNH. We're not really that, I'm a directional trader, so I find that actually quite difficult to do, sort of say. But if you look at TNH, it rallied early last year, but then by the time, it's done absolutely nothing. It's gone sideways. So one stock's gone up over 100%, the other one's effectively flat. So that is an example. If people, it's difficult to do. I find it a little bit difficult to sort of trade it. I can write about it. I don't have a problem doing that because the analysis tells me what to say. But trading it, I find it a little bit difficult. So very experienced at trading bonds, but you will not find me trading the yield curve. I won't buy 5-year notes, sell 10-year notes, or buy, very occasionally I might buy German interest rates and sell Italian or something like that, but different countries. But I won't get involved in the yield curve. Never quite got my head around it.
Moving on to the euro. What's the best thing to say there? Look, there's no different to last week. You know, it's back the major level that we'd be concerned. If we were short, we'd be back above 110. It's doing work around. It's basically in sympathy with equities. Effectively, it's just going sideways while equities are going sideways. I guess we're going to get a reaction pretty soon. Looking at range deviation, it's starting to look overextended in the short term. Got the weekly above the monthly, so it's on a valid sell signal still. No reason that can't break down. Bigger picture is still down. I'll change my mind if we close above 110.
Yep.
What's next? Euro pound, that gave a perler during the week when the pound put in its final low and hit resistance. When we opened up our discussions tonight, we're talking about the pound spiking down. It's recovered significantly there. That coincided with the euro pound hitting a quarterly resistance and a downtrend line. In terms of range deviation, it was a clear standout as well. So we had the weekly well above the monthly, and so that was overextended, telling us that any sell signals coming up that week were going to be powerful. And it's a good message, that one, because we've just developed some code that we're going to be using going forward that effectively tells us when markets are in a predefined overbought or oversold state. And the difference with this definition of overbought and oversold is that we're using lots of different time frames to come to that conclusion. And that is definitely a unique skill that we have. Typically, people, when they look at things that are overbought or oversold, you know, current indicators that use one time frame, they can remain overbought and oversold for longer than you can stay sold. And that's one thing that's critical to understand. So we're pretty excited about some new information, some new work that we've done that will help us filter out signals that are in predefined overbought and oversold zones. And certainly the euro pound that week, prior to that sell signal coming up in that box, that was already in a predefined. We were just waiting for that signal, basically. So stay tuned.
Do you want to look at pound CAD?
Pound CAD, yeah.
Spot rate just on the pivots.
I might just.
It's not going to have the trend lines on it, but it was just that the pound CAD hit its final monthly support. Well, it stopped just shy of it. Yep. And
I don't have access to those spot rates in CQG, but we've got it.
Oh, right. Okay. Well, you can see how much it's running through the week. It's rocket fuel all week.
So what's your view on the pound CAD this week, Shaun?
Still bullish. If you do, if you go back into CQG and do CA6.
On the CAD, yeah.
Which you might already have.
It's Canadian dollar for everyone.
Yes, the futures.
So had a big sell signal there off this weekly resistance level.
Yeah, exactly. So that was where I was talking about the pound is the strongest and the Canadian dollar is the weakest. So that means that the cross rate moves the most. So I don't see any reason for that to change. The velocity of that pound CAD move was very, very strong. So there'll be down days, get it pulled back, but looks like that trade is far from over.
Yeah, if you look at that, Shaun, on the CAD, the weekly first down was above the monthly first up. So that's about as overextended as you can get.
Yep, exactly.
And then that coincided with this sell level and a sell signal. So that ticked about 3 different boxes for why we should have been selling the CAD. On yen futures. bounced off a lower channel. We've had a weekly support form, which is this blue line, and it just stopped dead during the week. I know to our clients, we were talking about YCS, which is a geared short dollar yen ETF, and that had stopped dead in its tracks at the previous year's midpoint. This one's got a sell signal on it that's still valid. In terms of range, deviation, once again, the weekly yellow level was over the pink level, so that meant it was overextended and we got a sell signal. So that's, that's still valid. Shaun?
Yeah, I mean, I've had a yen position since October last year, so I had a very long March and June options, so very long dated trade. I had actually, when you had that buy signal at the beginning of the year, that blue square, I'd had put options from, you can see the break really from October and then into November. That's where I got involved. So we moved down a long way. When I had that buy signal, when the blue line had moved to the bottom, so suddenly support has formed, I did what's called a hedge. So what I did was I bought the futures against my put options. And so I was hedged against a rally. I wasn't physically long. If the market had gone a lot higher, then by default I would have been, and that's a little bit complicated. And then we actually hit 88, which was a Henkanashi level, which was on the professional commentary. So I what's called lifted the hedge. So I sold my futures back again, took the profit on the futures, and I've still got the puts. So so I'm sort of back with that, with the original position that I had. So we'll see on that one.
What's your outlook? Immediate outlook, Shaun?
Well, I did put on the commentary during the week. There was two things to do with Morgan Stanley actually, and the first one was, if I just call it up on my screen, it was Morgan Stanley. You know, they have all the analysts and everything like that. And they came out with their top 12 conviction ideas ahead of the earnings season. So 9 of them were buys and 3 of them were sells. And it's going to sound a little bit cynical, but I put them on my watch list because if Morgan Stanley is saying that something's going up, then I'm interested to see whether it goes into one of our levels, gets overextended because people buy it, because Morgan Stanley said buy it, and then we would look to go against the move. So I'm watching them. The thing that concerned me was at the end of the year that their number one trade was to buy the dollar and sell the yen in the spot rate, and the high is the 3rd of January, not surprisingly. They also said sell the euro and buy the pound, and the low was also the 3rd of January. Now we've now got to sell a much better level, so I'm happy enough with that. In the market, again, it's sort of professionals, I suppose, get a bit wise old owls and a bit cynical. It's like when Goldman Sachs come out with a buy or a sell. The general logic of a lot of people is say, okay, right, well, if they're saying buy, it means they've got to sell. They've got a lot of stock to shift. Is it illegal? I don't know. Is there meant to be Chinese walls? Yes. Are there? Probably not. There's all sorts of things that go on there. And so I'm not interested in what a big banker of funds or an analyst says about something. There are some websites if you want to do some fishing. There is a very good website which escapes me at the moment, but it's subscribable, which actually rates all the analysts. So it records all their recommendations and then says, you know, are they actually any good? Just because Morgan Stanley Tesla analyst or something says, you know, it's going down or it's going up, the market might move on it initially for one day. You know, there's some very well-known analysts on television or on every day who remain nameless, who say a lot of things. One of them's come out with 200 recommendations in the last month. Well, you couldn't trade 200 recommendations. I couldn't trade 200 recommendations, let alone keep control of it. So generally what they are is masters of marketing. They're not necessarily masters of markets. And so I'm interested in those stocks. We've got a little bit of time. Should we have a quick look just on Technician?
Sure.
Might as well. So the first one is AAP, which is advanced auto parts. So these first sets are all bullish scenarios. Yeah, we've had a sell. You can see it's coming up against its yearly in the time area. We've had a sell, and so I'm sort of watching that. The thing that we're also interested in, I'm just going to call up when their results are actually coming out, February the 9th, so quite a way away. So in theory, it's almost looking like a valid sell because we've got 3 weeks until their results actually come out. So I'm watching that one. Yeah, it hasn't done a great deal so far. Next one, sorry?
It didn't make a new high, annual high either.
Yeah, it's got to close above that high, and then you say, yeah, it's bullish and it's got no resistance. The next one is AMGN, which is a pharmaceutical biotech sort of stock, huge company. And again, we've had a sell signal. It's not doing very much at the moment, but there is some space for it to fall back down there. Next one is CHH, it's hotels. Even before the charts come out, I know that that red line is going to be at the top. There it is, yeah. So there's been a buy signal. We're really interested in that 57.50 up there. Yeah, see what it does if it gets up there. PLCE. One thing when I saw this story, I think on Thursday, I like to start watching them. So I put them on my quote board. I want to get used to their price action. They haven't been on my radar screen, any of these. And so what I'm really interested in is an example where the market has an up day and these stocks have a down day, for example, or vice versa, just so I get a flavor for it. So PLCE is just not bullish, is it? There was a buy signal back in November on Trump, had a few exits, it's broken its trailing protection line. The red line has moved to the top, and then we've broken the black line on Thursday, and there's space for it to fall, so that doesn't look bullish at all. The other one is Facebook, FB. Again, got that high, the all-time high, similar to Google. Look how long that red line was horizontal before it moved to the top. So that's a very, very big level. Just check when Facebook is coming out, so that is an important one. Facebook Feb 1, so that's the day before Amazon. So effectively what the key week has shifted. We've got Apple on January 31st, then Facebook the next day, then Amazon the day after that. So the week after next is pretty important. Then we've got Halliburton, which is an oil stock. We know we're interested in oil, so HAL. And it looks bullish, doesn't it? It's already had a real run. It's already had a real run. We know we've talked about oil and gas at the beginning of the year. In sectors, I always look at the sectors and the changes that happen over the week. Oil and gas had its best week for some time, actually, and that's without the price of oil or gas particularly doing a lot. So they've come into flavour. And so I've been monitoring about 70 oil and gas stocks in the scans over the last couple of weeks. I haven't had anything compelling come up, partly because the market is sort of loving them without the share price. So still interested in the pullback in some of them, but Halliburton does look bullish. ROK, this is one of my old favourites. This works in automation, robots, all this sort of stuff, Internet of Things. Really is a stock that's seriously loved. Yeah. So there is no resistance at the moment, as much, not anything major. That still looks bullish, but it feels a bit of a crowded trade. Then NOW. So you can see in this Morgan Stanley list, there's 2 or 3 that sort of agree with them, and there's 2 or 3 most definitely don't agree with them, and they're the ones that I'm particularly interested in. NOW, this is They do cloud servicing and stuff like that. Massive levels above, yeah. So very much interested up there. And the final one, which did make me giggle a little bit, is US Steel, would you believe? X. So they're bullish on US Steel. Now, when we talk about analysts and things like that, I can tell you now that when the stock was at $8, there wasn't any analysts. You can go to the FT website, the Financial Times, and it'll tell you what all the analysts are doing. Strong buy, hold, puts them all together and puts them in a table. I'll tell you now, there wasn't one person saying buy US Steel when it was at its lows. People started to say buy when it was trading at 20, yeah, when it had already rallied 100%. And Morgan Stanley are saying buy now when it's already gone up 300% in a year. Well, as you can see, there's been a sell and a buy. A major level has moved to the top. As far as I'm concerned, that trade has gone. It went some time ago, so wouldn't be too interested in that. I'm more interested in selling it. I mean, the thing about sectors is steel is still up there. It's still one of the love sectors. And the sells, DF, which is a foods. Has already come off a lot and is actually coming into some support points. So not too interested in that. Last one is GoGo, GOGO. It's trading at, was it $8, I think? You know, again, it's got major support. It's still a fair way away, but I wouldn't be interested in selling that stock. And the last one's Under Armour. Now, just a thing about fashionable and unfashionable. Under Armour about 18 months ago, so the code for that's UA, was in the #1 sector out of the 197, and it was with Skechers, which is SKX. I think it was #2. It was the #2 stock in the #1 sector, and it's just gone down 100% in the last year or so. It has a yearly support, but again, I might actually try and check to see whether you can actually sell it. We'll probably do this another week about when you short sell a stock, whether you can actually borrow the stock to do it. It wouldn't surprise me if I went into Interactive Brokers and I tried to sell Under Armour. They wouldn't lend me the stock. There wouldn't be anyone willing to lend the stock. When the stock's been going down for a long time or is near its lows, you can't borrow the stock to sell it. You can when it's at its highs. You'd have no problem buying it when it was the #2 stock in the #1 sector. People would be falling over themselves to lend it to you. I'll check that during the week to see whether it's actually possible to sell that stock. But again, not really that interested in that.
Okay, looking back at the Aussie equity markets, and we'll have a look at the equity markets more broadly. We had a sell signal after an extended period up. I think it was like 8 weeks up, and we got a sell off resistance. That's had a pullback now. On the bigger picture, it's still bullish. We're closed above quarterly and semi-annual levels, so there's support there still for the ASX. Moving over to the Dow Jones. This is the Dow Jones cash. Sideways again, so sideways to down for the last 2 weeks, but certainly hasn't broke any levels that would give you critical confidence. You know, it's flirted with last year's close, which is around, hang on 1 sec. So last year's close is down here and around 19762. Keeps flirting with that and holding. You know, until we close below last year's close on a weekly basis, so we close below this year's high on a weekly basis. Really, we're just trapped. We keep saying there's still room for equities to drop, but you know, to the upside, there's still space. So we are indifferent in many respects to the broader index at the moment. Obviously, long term, it's still going up. We keep saying it can go, can drop down here and be a big buy. but right now we still haven't seen a weekly close that's indicative of a decisive move. So we remain a little bit what's the word? Indifferent really to the Dow, although long term up. Similar story for the E-mini and NASDAQ. Shaun, did you want to add anything to American indexes?
No, they're dead, just sideways. As you can see, we're getting sells and buys trapped in a sideways mode, just waiting for it to decide which way it wants to go. I agree that longer term it's probably up, but it could fall a long way and still be in a major uptrend. So just waiting to see. I suppose the one thing that I put out during the week was that normally when we're doing the scans in earnings seasons, what happens is we get breakout buy signals. So the results come out and the stock does really well. And last week we just didn't get that, did we? We didn't get anything like that. So there might be instances where stocks beat on their estimates, but then it doesn't actually go up, and in some financials cases they actually go down. So there doesn't seem to be the enthusiasm. Markets will do whatever they want to do, whatever the news is for an individual stock. And so at the moment there is no enthusiasm. Maybe they were waiting for Trump. I don't necessarily buy into that. It seems a bit too easy. So I'm very interested in the scans. If I do get any breakout buys, I want to see if there's a story behind it. I want to see whether they beat or missed or whatever it was, just so that I get an idea of the underlying dynamics of the market. But at the moment, completely dead. Can we just go back to US Steel? Just do it on CQG. You've got the this note actually came out on Wednesday from Morgan Stanley, and I just want to show what the price action did on Wednesday. And this is an example where you can have a position and suddenly it moves, up or down in your favor or against you, and you think, well, where did that come from? And there is normally some sort of reason. And you see there was a big up day on US Steel on Wednesday. Yeah. So people have heard the note, and boom, oh yeah, US Steel buy it. So they all buy it on the same day, and then it's come straight back down again. I mean, it's drifted in like the next couple of days. So just an example of, if you get big one-day moves on stocks, I do normally want to just do a little bit of work finding out if there's a reason why. I don't look too hard. If I can't find it in 2 minutes, I give up. I'm not going to go fishing that much, but normally it's relatively simple to find out if there's anything that's happened. So yeah, not much on indexes. FTSE's still under pressure, and the pound is going to be the catalyst there. So if the pound goes up, the FTSE goes down. Don't have much doubt about that.
And the German DAX, that broke some space quite a while ago, and has been filling that on a daily basis now. It's effectively doing the same thing as the Dow. It needs to spend time here to work out whether the next move is up or down. So it's going to be the same story. If we look to the study below, we've been sitting on new annual highs, but that white dashed line there's last year's close. So maybe it's like a weekly close under 11,445 will spell a retest of this trend line, and similarly, weekly close over last year's high, going to push up to 12,200. So just really a mirror there. And in many respects, the pound going up, the pound going down has been fueling the FTSE going higher. It's been similar with the euro and the DAX. So if the euro does start breaking a lot lower and taking out this year's low, then you can expect the DAX to be rallying in sympathy. But going back to oil,
yeah. Sorry, yeah. Yeah, go do oil, yeah.
Yeah, oil.
So I just want to do the final thing on the sectors. We'll finish up.
So oil, long term we're bullish. In terms of range deviation, that's the annual first up here. So we closed well above last year's annual first up. At the moment, the market's kind of neutral in terms of range deviation, but it is holding this support level. The broader trends up. So
do you have Do you have Brent crude on your system?
Oh, I think I do. Yeah.
QOA.
I'll just come back here and do it.
That gave a buy on Friday. Was it Friday? I think so. So NYMEX didn't, so the US didn't. Yeah, there you go. So Brent crude, which is heavy crude, which is used in industry, is different to NYMEX crude, which is light crude, which is used in petrol and cars and diesel. So they are both obviously oil, and they will move generally in the same way, but you can get some very, very big differences between their prices and the spreads between the two. So Brent crude is significantly more expensive than WTI or light crude, but there was a buy on heavy crude. It's got a bit of work to do, hasn't it, though? But
yeah, needs to get back over this annual high on a closing basis. But
yep.
Got enormous gaps above it. Tells a similar story though. You know, closed the end of the year above this semi-annual first up level, so it's just outright bullish and above the annual level. So yeah, strong. It's strong. Look, that's not to say that oil couldn't have a decent pullback. I mean, we're just saying it's strong on an annual level. So pullbacks are going to be buys.
Yeah. I suppose the final thing is just on sectors. What's the top 10? What's the bottom 10? The top two are still banks, so super regional and regional in the west and southwest. The big mover was oil and gas field services. So we talked about that earlier. That's up at number 3. 3 months ago, it was 113, so it's had a really good run. Oil and gas machinery and equipment, that's at number 5. Mining and metal ores, so they've benefited from gold. It's 6. The things that have really dropped is energy and coal. So coal has been loved in the past. That was 197 about a year ago and went all the way to number 1. That's dropped from number 4 to 13. And a big mover this week, and now we know why, is steel producers. So they were number 25 the week before, and now they're at number 14. So that's quite a big move, but we know why. And that's why sometimes having a bit of background is useful. So finance is still hanging in there, but not a lot of them. They were the top 8 2 weeks ago, and now just the top 2. So finance is going out of favour. The bottom hasn't really changed very much at all. So 197 is retail and mail order, whatever that is. Apparel and clothing. So, you know, Morgan Stanley have said, you know, sell Under Armour. Well, apparel and clothing, which Under Armour is within, is 196. So it's already unloved, which actually makes me get more and more interested in it. There's 27 stocks in there, and I'm going to have a look at them this week and see what's in the setups. And there's some very big stocks there. Nike are in there, Foot Locker, GII is another, Gill is another one. There's a few that I've followed for many years. Other ones at the bottom are medical. So medical, generic drugs, drug supply, hospitals, unloved. Obviously to do with Obamacare, I would have thought we all knew it was going to be, he was going to abolish it. And that's the first thing he said he was going to do, wasn't it? I think he signed something day 1.
Yeah.
So hospitals, unloved. Energy, solar is 190. Of course, he said something about climate change or something. He took something off the website. I'm not quite sure. I mean, energy and solar, I assume I might do a bit of background work there. I assume they get lots of subsidies. I know in Australia, do you want to quickly show an electricity chart? That might be,
yes.
Yeah, that'd be interesting. It's not something anyone can trade. Even I can't trade it because I can't trade the Australian energy market. I wish I could, but having looked at what this thing did. But
it's gone up another level again.
has it gone up again? Boy.
Yeah, it's frightening.
How much is that on a one contract? That's, oh boy, that's like 300,000 or something stupid. It's gone up even. God dear.
Yeah, so
one contract is something scary.
400,000.
400,000, boy.
So for everyone that's watching out there, Australia is going through a I'm not sure what you call it, but it's effectively an energy rotation out of coal and into renewables and gas, but unfortunately Australia is busy shipping all its gas offshore. So when you take out baseload coal and you replace it with super expensive gas, and then you're relying on the wind and solar, that's what's going to happen to your power bill. It's just going crazy.
I mean, there's one thing about the background. I know you've spoken to me about this, privately a few times over the last year or so. And when you showed me this a couple of weeks ago, I just went, whoa. Surely, I mean, I've actually spoken to a couple of other professional, big traders about this, because they've asked me about the Australian dollar, and I said, well, here's an energy chart, and this is what happens. Politically, they've sort of decided that they're going to change it, and not necessarily thought about the consequences. I look at that and I think, well, surely that must impact the Australian economy. It's such a big move. I mean, it
is. It sure is. I mean,
it's going to affect people's electricity bills. It affects industry's electricity bills, all sorts of things. It seems really quite scary. So I'm interested at what point that starts feeding into the Australian economy. I assume that once you close down a coal power station, that's it. You can't reopen it. It's gone.
It's very difficult.
Yeah, and if you do, it takes a long time. So just some background there, really, about the Australian economy and what it makes me interested in the Australian dollar. The Australian dollar's been doing very well. But I look at that. Has there been power outages, or is it a problem with short-term energy peaks?
There's a bit of both there. So, I mean, in South Australia, we have the heaviest concentration of wind in the world, and we've been having blackouts and interconnectors failing, and it's a mess, absolute mess. And you've got large industrial users facing exactly the same price rises that you're looking at there. They're just bleeding, and slowly but surely, the Australian industry is being destroyed blow by blow, and we're moving into renewable energy, and this is the price. But look, if you take a longer term view, it'll be interesting to see. It's not really my business to have a view on this, but I can tell you it's having a massive effect on the businesses that are existing today. And obviously, when you see carnage like this, it does create opportunities. But I'd say the next step, for large users, is we're going to see demand start falling because businesses go out of business, can't afford it.
Yeah, exactly. Well, something for the background, something it's in the back of my mind for the Australian dollar and possibly the economy and Australian interest rates and the Australian stock market, the index overall. But a bit of background information there for everybody.
Shaun, has any questions come through?
No, not today. I'll just check. It wasn't a couple of minutes ago. No, I think we get, all our clients are pretty busy asking us questions during the week, aren't they? So it's pretty active on that. So no questions today.
Okay, all right. Well, next week, we're looking forward to next week's because it's going to be the session prior to the month end. So, that's always a really important session, the webinar just before the month end, because they will sort of determine the immediate outlook for markets. So we hope you got a lot out of tonight. Don't forget there's a link in the chat box, I believe. You can click on if you want to get in touch with us. And we do have a Facebook inner circle where we have regular commentary and updates from both Shaun and I and members. That's going to become available more broadly if you're interested, and we'll let you know how to get on board. So I think that's it, everyone. So I hope you have a great week trading, and I hope you've got some valuable tips and information tonight. And we look forward to seeing you next weekend.
Okay. Yep. See you, everyone.
Okay. Thanks, Shaun.
Cheers.